So the topic for panel discussion session 4 will be meeting the funding need, opportunities and challenges. Mr. Tamal Bandyopadhyay to please join us on the stage. Ladies and gentlemen, give a big round of applause for our moderator, consulting editor, Business Standard, Mr. Tamal Bandyopadhyay to join us on the stage. I request the speaker, Ms. Srimathy, Executive Director, Indian Overseas Bank, to join us on the stage. I request our first speaker, Ms. Srimathy, Executive Director, Indian Overseas Bank, to kindly join us on the stage. I request our next speaker, Mr. K. Paul Thomas, MD and CEO, ESAF Small Finance Bank, to kindly join us on the stage. Our next speaker, Mr. T. Venkatakrishnan, CGM, NABARD, to join us on the stage.
Meeting the funding need, opportunities and challenges. Opportunities and challenges are the two sides of the same coin. There are opportunities and there are challenges, and both are created by this gentleman and the lady, whoever. The people who are representing the industry. I am not a part of the industry, but one foot there, I have been also a sort of observer, you can call me, for the past more than a decade just around the Andhra crisis I have been, and I heard someone talking about Microfinance 1.0 and then 2.0, and now we are on 3.0. 1.0 was pre-Andhra, 2.0 was post-Andhra Malagam Committee, and 3.0 was pre-RBI new rules. But in between, all the other issues are there, like what happened in Assam, and sporadic other events. So while we have external circumstances like COVID, which is a global event, once in a century event, we have demonetization, we have loan waiver at different parts, pre-elections, we have flood, etc., which are created not by the industry, but at the same time we are also having situations or the crisis created by the industry. Rakesh Mohan, former RBI Deputy Governor, used to talk about lazy banking. So we also hear that lazy microfinance activities by some of you. I don't know whether they are here in the hall or outside, because someone said that South India is actually the father of microfinance. So let's guess that South Indians do not do that, others do that. But that's what happens, So you see the expansion, etc., nothing much happens. Rather, on the other hand, you see the trying to over leverage the same set of borrowers and then creating problems. So I think the problem is lying within, and thanks to Gigi for this regional conference. I think these are the occasions where we need to have a sort of soul searching. We can always get excited about UPI, about technology, about all the innovations and all. But unless the industry changes, industry meaning the entrepreneur changes this approach, things will not change. From one crisis to another crisis, nothing much will change. So with that, not a very charitable remarks. With that, I would start. We have very interesting panel. We have banks, non-banks, and everybody else. And I heard SKDRDF Manjunath talking about why cash flow should not be taken into consideration and why Reserve Bank of India should waive the capital requirement, etc. I think both will invite disaster. Manjunath has gone for tea. Manjunath thankfully has gone for tea, but in fact Reserve Bank of India is now coming into a sort of unified regulations. If you look at the RBI regulatory turf, bankers are talking about, she will endorse me in private probably, bankers are talking about micro regulations. RBI is getting into too much, breathing on bankers' neck, asking bankers what to do, what not to do. That's only one part of it. Earlier, NBFCs were not, it was a soft regulation, but Reserve Bank of India is now, large NBFCs are almost on a par with banks. Small NBFCs also now feeling the heat. And the UCBs, the cooperative banks which are outside the RBI radar now also come in the picture. So, you could be a MFI, NBFC, you could be a cooperative bank, you could be a bank, but there is no more soft regulation. RBI is keeping a very close watch on each of you, because RBI thinks that for the sector stability, each of them will be regulated in a very strong way. So we are moving into that. So we don't need any capital requirement should be less, etc., etc. I don't think those things hold any water with Reserve Bank of India. So with this, let's have only quick 2 rounds, 1 round with the opportunities and 1 round with the challenges. We start with what, opportunities or the challenges? So lady, this is the first lady I have seen. I watched just before lunch I came. So half of that and the last panel discussion, there is no lady. So let's have a gender bias. Madam, starting with you. You are a bank and under regulations, because even if you don't like, I don't know whether you like it or not, but under this so-called priority sector lending, you need to be there. You are giving loans, and if you can't give them directly, then you give loan to the MFIs, and that's treated as microfinance. That's treated as a part of the priority sector loan. So from you, it's not out of love and affection for that particular segment of people, but basically compulsion, if I may say so. So how do we convert this into actually love and affection, and actually going them, be by their side, and coming them, getting out of their poverty or making entrepreneur out of them? What are the opportunities you see? Is there any more working mic? Acha, both are working. So let's start with IOB, banker from IOB, Ms. Srimathy. Yeah.
Thank you so much. Thank you, Sa-Dhan, for making
first round opportunities,
getting me up to be here with all of you all here. And thanks for the positive bias of starting from with a lady banker here. Coming to the microfinance, the banker's role in the microfinance. As I think I got the opportunity of listening to the one panel discussion before. The figures were all there with all of you all. The loan book, the GLP, whatever you call, is 3 lakh plus. If you get into a segmentation of it, is who funds that to how much? It is roughly about 1 lakh, and it's about 37.5 or 7% have come from the banks. Close to 36 point some percent has come from the NBFC MFIs, and the rest part of it has come from the other NBFCs, SFBs and others. That is the segmentation. Now, if you still bifurcate that, how the banks have directly lent to the MFIs, and banks have on-lent to the, directly lent to the ultimate beneficiaries, and we are also on-lending to the MFIs. And ultimately, most of the funds is going from the banks to the beneficiaries, part of it via MFIs. That's how it's been. So, as you said, it's neither love nor hate. It is a model that's working. And one of the panelists made a very right remark that what is the interest rate reduction that is expected, and when is it going to come? Why is the difference in the rate of interest that is coming? And there was one more panelist who was mentioning about the strength of the public sector banks vis-a-vis the strength of MFIs. He specifically mentioned about the balance sheet, the book size, or the financial muscle that bankers have vis-a-vis the reach the MFIs have. That particular stark difference over a period of time has started narrowing down, rather it started blurring now. The reach is there with the banks also, and the finance is there with the MFIs also. Why the reach is coming? One is the branch expansions that have taken place over the last years, and where every part of the country the branches have come, the consolidations, the mergers have helped it better, and more importantly, the BCs and others the bankers are engaging with. They are our extended arms. So if you look at it from that part of it, the reach is as good as the MFIs have today. Now coming to the financial power, or the funds availability and the cost at which funds is available, the difference is still there. The cost of funds to a bank definitely is much lower. That's because of the access to the public deposits that we have. The cost for the MFIs is definitely going to be higher. And when we on-lend to the MFI and they in turn lend to the ultimate beneficiaries, the cost to the beneficiaries is definitely going to be, is not already quite high. It is something like the model I look at, from the farmer to the ultimate consumer. If we always talk about the price a farmer gets vis-a-vis the price of ultimate consumer pays. So in that sense, the beneficiary, the cost at which they get finance, to the cost at which the bankers are willing to lend, there is a huge gap. This definitely is the model ahead is going to be how do we bridge that. And a lot of again points were there. There was somebody talking about co-lending, and we get into a pool buyouts, we get into co-lending methods, and so many other things going forward. And there was some mention about the digitization, the technological pace at which it has to happen, and that's happening also. The bankers are now more and more into digital transformation we are getting in, and more than the bankers, the ultimate beneficiaries are taking to technology like much speedier and faster pace than even we would have expected it. So with this pace, with a click, the ultimate beneficiary can apply, and end-to-end digitization is happening. Now all of the banks are getting into that complete digitization, without seamlessly, without any manual intervention. A customer need not visit the branch. The bank need not see the branch. A lot of that, the account aggregators and a lot of other intermediaries, you can draw the credit report. And there was somebody who was mentioning about the data, that is the SHGs or the beneficiaries, how much are we collecting and collating and using the data. That is all that is happening because of the digitization, end-to-end digitization that is happening there. Because all the account aggregators and this thing, the capturing of the data, the artificial intelligence, the machine learning, everything that is happening, whatever we talked about is a reality that is happening. Maybe not 100% now, very soon it's going to be the dream situation that we are looking to.
Thanks, Srimathy. We'll get into that, dissect certain micro issues. Just only one small thing, my observation, and then we'll go to almost the namesake of our governor. It's not it's Sachikanta Das, right? So we'll go to Das. Just one thing that you said, how the interest rate goes up, and then you discussed about how the farmers, the farm produces and all. Only difference is this: when it comes to farm production, you have lot of intermediation in the sense of keeping it cold storage and transportation, etc., etc. But here, that is not applicable. So only problem is the industry. We are into microfinance. We are into microfinance, but we put the grab of we wear the robe of a saint that we are here to change the world. We refuse to acknowledge that we are here to make money, and that's true about the so-called impact fund also. I don't know what impact of course they want to create an impact on our life, but at what cost? Which impact fund gives money and expectation less than 18 to 20% return? So return is the key of it. The day the industry accepts that yes, return is the part of life, I think everything becomes much, much smoother. Yes, that's sir.
Thank you, sir. Thank you, Mr. Bandyopadhyay. Thank you, and good afternoon to everybody, my eminent panelists here, and the organizer Sa-Dhan for giving this opportunity.
First round, the opportunity, sir.
Right, sir. On behalf of Indian Bank, I am representing here. So, as rightly said by Madam, the kind of finance inclusion ecosystem has really evolved over the years. When we talk about the finance inclusion, it dates back to, it's a 2000 years back, the human existence itself, starting from the Kofi Annan, when he said that the Somalia, the survivor, he is after the last mile chicken. That time, perhaps the last mile delivery of finance inclusion has commenced. And for the sake of only a clarifications, we can keep it as a PMJDY Jan-Dhan pre-era from 2014, and we can keep it that finance inclusion post-Jan-Dhan era. Looking into the microfinance institutions and the MFI story as along, with this 20 years existence, 3 lakh crore plus book size, and having 2.1% of value added to the gross economy, and having survived the crisis which has rightly mentioned, the COVID pandemic very recently, or you can talk about the Ukraine crisis, where this payment and settlement system got a lot of challenging issues, where the RuPay card and the digitizations came into rescue. And top up to that, this demonetization has also had its impact. In those cases, if you see the way the MFI has grown, or with the support of the financial ecosystem and the commercial banks and other stakeholders, it is a very commendable journey. And it would have been not possible without the kind of innovations and the kind of impact that entire journey has really evolved into this particular scenario. And today, if you look into this 3 lakh crore book size, roughly if you can say that it is a loan book of most of the commercial banks in a medium size category, or roughly around 70 to 80%. So itself poses its challenges, but it gives an opportunity that whenever that, when ma'am says that 80% still the total lending comes from the commercial lending sector. So it is the opportunity commercial banks are encashing, and it is, we see the model here, starting from the JLG model, the SHG model, or the BC model. If you see, the lot of effort has gone into making it a profitability kind of venture. And the Trinity has helped. The Trinity from the policy making body, it was the courtroom of only the RBI when this microfinance and lending was really initiated. But today that policy body has got a tripod like Ministry of Finance. They have been very proactively involved in this Sa-Dhan program. The MORD through this NRLM, SRLM activities through the JLG and SHG groups, and also the RBI very recently from the policy body when they have decided let's go for a principle-based kind of regulations. Earlier it was a rule-based regulations. Now they have, from June 2022, they have really migrated to a principal lending model. And also the JAM Trinity, the Sa-Dhan, Aadhaar and Mobile Trinity, that has really helped the kind of ecosystem. So these are the opportunities really provide to the MFI front. Today, if I talk to the Indian bank, we have taken the BC model into that kind of opportunistic model. When the business correspondent model was considered to be not a sustainable model, we took up a challenge. And today, the life cycle management, the profiling of the BCs, their financing, and around 42 digital services are being offered through my BC channel. Today, proudly I can say that today we are at the pioneer at the BC functionings, giving the doorstep banking services as well as the fixed outlet model services of offering 42 services, including all the SSG linkage, dual authentications that could happen into this particular segment. So that way this opportunity could be encashed by the MFI. The way we have started the digital journey, as madam has told that bank has really investing a lot of things into the digitization process. Take a cue, recently we have done completely digitization process of the jewel lending. Even from the BC channel, one can have this kind of lending through the completely one-to-one end-to-end services. So this is where the MFI can take a cue. Huge opportunities are available in terms of the liquidity. Banks are flush with the liquidity. Banks are flushed with their innovative products. The co-lending model, the co-origination model is working very fine into that aspect. So personally also I do not see, because I am very passionately working with this finance inclusion field for the last 10 years. So with this kind of ecosystem and the kind of NPCI payment and settlement system which is happening, we can definitely say the future is definitely brighter, and the future is also posing at around CAGR of 30 to 35%. Today, my book also at the SSG loan book, it works with 13,000 crore and YOY growth with 56%. Then we are also planning to have a YOY growth envisaging around 25%. And we have got a tie-up with the Tamil Nadu government from the BC channel. We are having the old age pensions where the microfinance also were lending to the pensioners. We have got the IB deposit schemes where very small kind of deposits are being garnered from the BC channel, and top of it, around 90% can be lent across to the customers. So that kind of model and that kind of recovery, we are working on that. Secondly, also, as I told you that we can encash the SSG movement into a different orbit. Like today the banks, today if you look into the credit rating model, what we are looking for a good portfolio. We are looking for a good documentations. We look for a good monitoring system. starting from the appraisal to documentation to the recovery monitoring. This is all part of the credit. So we are so obvious that no credit linkage and credit delivery system should happen. It should happen. It will have automatic process. But where is the kind of innovations that is happening where I require the SSG profiling? The way we have done the BC profiling. Today, if you ask me that each and every business correspondent, what are their antecedents, what are their qualifications, what are their geographical segmentations, whatever their, what you can say, what are their income sources, even also we are tapping the cash flow model. So today, if we talk about the finance inclusion and microfinance, it's not the credit. To me, sir, it requires the this entire Jan-Dhan model where the basic saving deposit account is being opened, then converted into a very credit history kind of background with PNJD, OD kind of setup, moving into the social security network like micro insurance programs like JBY and SBY, and the Atal Pension Yojana like the micro pension scheme. These are the factors which makes the entire model is a very sustainable. So these are the opportunities to me that we can definitely work on so that the future is definitely bright and India is rising. Thank you very much.
Thank you. Thank you, Mr. Das. So we heard two commercial bankers, universal bankers. And so I think both of you, Srimathy and Mr. Das, agreed that all the building blocks are in place. Sky is the limit. Opportunities are endless. Das spoke about 30-35% CAGR growth, etc. Thomas Saab, now comes to you. And you are sort of one of the fruits of innovations, SFB, that's what they said. But why are you, you meaning not you in your entity, but all the SFBs, most of the SFBs are gradually withdrawing from microfinance. If there is so much of opportunities, if every building block is in place, then why do all the SFBs are gradually withdrawing? I mean, for instance, you started yourself with 100% unsecured loan, now it has come down to 80% odd. And those who are 80% now, they are bringing it down to 50% or 60%. So everywhere across the small finance segment, there is a strategy is how to cut down the exposures to microfinance. If not directly, but by not growing and growing the secured part of it. So there must be something else, no? I mean, if what Srimathy and Das said, everything is true, then you would not have done this. You meaning again, not you, the entity, but the SFB industry. Please. What are the opportunities you see, sir? And if there are so much of opportunities, why are you shrinking your microfinance portfolio?
Thank you. Thank you, Tamalda. Okay. Thank you, Sa-Dhan, and congratulations to Team Sa-Dhan for organizing this Southern Regional Conference, first time. Gigi Saab, thank you and congratulations for this initiative. And Tamalda, I don't agree with the statement that all SFBs are withdrawing from the microfinance space or financial inclusion space. So we are a bank now, so we have to cater to the all segments of the society. We are a small, even though we are a small finance bank, we also have customers from other segments. So that is why from the 100% it has come down to 80%. But there is on the other side, I agree with you, because the investors, so there is a feeling that as a bank you should not have a large portion of your assets in unsecured category. So there is a sense, and we are getting that sense from multiple stakeholders. So we have to, for a universal bank, if you take their percentage of unsecured book, this microfinance maybe less compared to because we started 100% with microfinance. So we have to slowly diversify our product portfolio. That is the only. So we are not moving away from microfinance. So we are not moving away from our customer segments. So the same customer segments, we see an opportunity that we can build a secured book also. In the even we are not even our secured book is built in among this customer segment only. So we are giving gold loans for today. We have started gold loans, emergency gold loans are normally emergency loans. So today we have 2,000 crore loan book. 50% is from the same customer base actually. The microfinance customers, they Sadaf earlier session said save gold is being used as a saving product in India. It's true. So it's an emergency. It also being used as an emergency loan. And we also introduced micro housing product, affordable housing. It is also mostly going to the same segment. We have introduced a micro enterprise loan, so the 1.5 to 3 lakh and 3 to 5 lakh rupee loan. This is also going to mostly to the graduation loan. We also partnered with the TNRTP, so we will be starting giving loan using that also. So there is no inclusion, the financial inclusion space we are there. And we have renamed it from microfinance, it is to a micro banking space, giving multiple product to the same segment. And I strongly believe that there is a lot of opportunity, especially for bank like us, especially in the rural side. Around 48-50% of the GDP contribution comes from the rural, but the credit outflow to the rural and semi-urban areas is almost 10% only. So we are seeing a lot of opportunity in that space. And being this topic is mainly funding to the MFI. I assume that it is that is behind. So what is the funding opportunities and challenges for microfinance institutions? So for ESAF Small Finance Bank, when we started, so 100% of our micro banking lending is being done through BC partners. So we believe in partnerships because we have seen, ESAF has seen all the phases, not the three. Even there was a early microfinance minus as NGO, the early 90s phase, because we started as an NGO in the early 90s we started. So we have gone through that model also, and an NGO, we used to have that partnership principle we applied. So in the bank also, we continue that principle. So today we have 21 business correspondents. Out of 21, 15 are microfinance institutions. So we are continuing our association with the microfinance fraternity. We are very active in Sa-Dhan, we are active in MFin, we are active in the state associations. So we are part of the ecosystem. We are not moving away from that. So as a small finance bank, we have to universal banks to maintain meet 40% priority sector, but we have to meet 75% of our PSL targets are there. So we have mostly wanted to work with the smaller MFIs because only loans given to MFIs less than 500 crore is considered as PSL. Others are not considered as PSL. So we have given term loans also. So that is there. So for banks, universal banks and small finance banks. So we need to use this opportunity of this network around. Sa-Dhan has got more than 100 members, so that this member network can be used because they already have presence in the rural areas. That is one opportunity for banks and MFIs. So the funding is a major challenge for always. It's a challenge for, because I have gone through that as an NGO MFI and an NBFC MFI. I faced that challenge and I experienced that. Even though situations are different, but funding is always a challenge for MFIs. But so new avenues like co-lending and BC partnering with the bank is a very good opportunity. So make use of that opportunity, and also think about not only, as Tamal earlier said, come out of the lazy banking or lazy. We always all wanted to follow one suit, one product. But so most product innovation, not much has happened in the microfinance space. So we can move to the MSME space. MFIs also have to build their capability so that banks will be very happy to work with MFIs in those space. Agri lending is another another. So we are using our BC partners to source agri loans. We are working with farmer producer organizations. We are making them as our BCs. We are using them, working with them. So, so for banks, generally, I'm seeing a lot of opportunity to working with MFIs, FPOs, and these community-based organizations or organizations having last mile connect. And these MFIs is a regular continuous fund. You don't have to bother about if you partner with a bank. So always that tap never ends. So that is a great opportunity. So you can continue to source new customers, expand service. So that is a good opportunity. Make use of it. Instead of building your own balance sheet, partner with the bank, and that is a good opportunity, because I can definitely say that, because I have been a microfinance practitioner. So I can say what is the best model. I can recommend that. So I stop here now.
Yeah, thanks, Paul.
We'll talk about challenges later.
Yeah, we'll talk. I think the way I introduced you, I put you on the defensive. So instead of okay, so what essentially what you are saying, though, no, the modes have changed, its products have changed, but the same. The beneficiaries remain the same. Sadaf, you had the benefit of being there at the earlier panel, so I'll bring you at the last person. Before that, over to you, Venkatakrishna sir. You have heard us, so I don't need to waste your time, our time again saying certain things. You take off.
Okay. SAG members, their graduation, and they're starting the entrepreneurs, turning them to entrepreneurs, or starting the enterprises by them, was also given importance by us, as even also we'll be sanctioning many of the programs for their developing them into entrepreneurs. We call them as micro entrepreneur development programs. And also the higher portion of that one, or the later version of that one, we started even sponsoring the livelihood development programs. So these are the ones which he's helping them to graduate themselves into entrepreneurs. This morning I was seeing them capacity building, and they're starting the entrepreneurs, or making them enterprises or entrepreneurs. There are several schemes out there, both from the state government, central government side, which is helping them to become the entrepreneurs. And SAG as a group, they can also produce and they can also increase their income. And NABARD supports in various ways by sponsoring them for maybe a month's program or 2-3 months program, and then different deliverables have been given to them so that they start the entrepreneurs. The idea of mentioning to you is that when so much of lending takes place, both from banks as well as by the NGOs, by the MFIs, and so many other types of funding that takes place, the money that has been taken, and if it is used for the creation of more job opportunities, maybe wage employment, or for the starting the organized small units or tiny units, or even aggregation can take place, then definitely the loan repayment will be far better, and at the same time higher amounts can be availed as a loan. That itself is an opportunity for the MFIs as well as for the other banks. Data capturing and how it helps the banks to lend for more of these SHGs. We have E-Shakti and E-Mati. In Tamil Nadu, we have E-Shakti, E-Mati. Aggregation is also there. And many of our opportunities are also given to the SHG members for them to participate in exhibitions, and marketing support is also given to them, so that their income levels goes up, and their availment of funds from various sources can also go up. So these are some of the opportunities I thought I'd just make a mention to us, mention to all the audience. And we have several other initiatives are also there, where in addition to this, these are all supported in the form of grant. The other support of providing refinance for on-lending by the bigger MFIs by NABARD, and also by the smaller MFIs by NABARD subsidiaries are there. One is NAPFINS, where our Executive Director of Sa-Dhan is also in charge of that one. earlier. And also the other subsidiaries are also there, like NAPKISAM, NAPSamruddhi. I think most of you, who is available here, I can see most of them might have availed the loans from these subsidiaries also. So we support the sector by giving the support from NABARD subsidiaries, as well as various type of grant supports, and also by taking up the cause of MFIs over a period of time for the last 30 years. What are the ways we are able to do it? We have been supporting this institution, and a lot of opportunities are there, as the statistics shows. A lot of potential is available for these MFIs to increase their business over a period of time, and how much they are able to contribute in the entire sector, along with the banks and also the small finance banks, and to what extent they can go, given the regulations and also given the opportunities, maybe impact funding or other PE funding which is available to them. At the same time, right from morning also, the other models which have the group lending, which has resulted into joint liability groups, then followed by the societies, that the PACs, that is Primary Agriculture Credit Societies, which our chairman sir was mentioning in the morning, and also the farmer producer organizations. They're all again all into group mode only, meant for the members, and where they can also offer you equal opportunities for lending as well as for the microcredit. And as these institutions evolve, then there will be a lot of opportunities for all the sectors, including the SHG sector, which is funded by various institutions, can grow together. So these are the various opportunities. I thought I'll make a mention to them. And maybe in the second round we'll talk about challenges.
Thanks, Venkata Krishna. So, Sadaf, you have the privilege of being here and now continuing. So, tell us what are the, maybe you'll end up repeating certain things, but what are the opportunities you see? But Gigi Sahab, just one small, Paul and me were discussing that when you talk about meeting the funding need,
the credit growth growing, and every bank lending into the unsecured segment, and that coupled with, I think, where we are in terms of an economy, in terms of...
And thank the opportunity being given by Sa-Dhan speaking on this occasion. I was there in the morning session where the inaugural session was also there. And for the last maybe 1 hour before also, when I'd come here, I was just listening to various initiatives, various advancements that has been happening in the microcredit sector. Morning we have listened to our chairman sir also. Even RBI madam was also there to explain the various regulations that are there in place. And a lot of information data has been discussed right from morning. 30 years is the witness for that.
We have developed a credit scorecard with the help of Equifax. This is over and above the credit bureau report that we generate. The credit bureau report gives you that whether there is a default or not, but the credit scorecard gives us a reason that whether it's a high risk customer, whether it's a low risk customer or a very low risk customer. So on the very low risk customer, we can definitely increase our exposure. So I think those are the opportunities that are there in the ecosystem, and I'm sure these are just a few. There are many more.
Thanks, Sadaf. There are 5 of us, excluding me, and you are one side and the rest of them on the other side. Because which the clarity has come from what Gigi said is purely from the lender's perspective. So you are the taker and they are the givers. All the 2 universal bank, NABARD, and you are a small finance bank, but still you are the giver. So Sadaf, I'll start with you. And your appeal is to why not bring down the cost? We'll ask them, and they are the challenges. What are the things you look for? But before that, you need to answer in 2-3 minutes and all. There is a perception among successful NBFCs that if the business model is right, there are always, people will be wooing you with money. Why do I want to become a bank? Because there is a capex. I mean, I need to put up the branches, etc. I mean, you know that. There's an OPEX, I need to have the employees, etc. And then there's a regulatory capital, the SLR and CRR. So taking into all this consideration, it's a big hassle and the cost of money is not cheap. Yes, the banks say they have the access to deposits, but if you load all this, the capex, the OPEX and the regulatory requirement, the cost of money is not as cheap as it's projected. But if you are a well-run machine as an NBFC, your cost actually becomes even cheaper than the bank. Do you agree with that? I mean, do you fall into that category? Then you will not creep about that the cost of money, etc., etc. Is this the biggest challenge, to have actually a well-run with the right kind of model NBFC? Therein lies the problem. The problem is not lying with them; it's with you. With you meaning not your entity or you as an individual, but your industry. That's the biggest challenge, and then I'll ask each of them to give us a perception, what you look for to give money, how for Sadaf from 11% or 12%, how can it come down to 10% or 9.5%? Prayas is a unique project. Prayas is very different. The objective is very different. But leave Prayas outside of it. Yes.
Yeah, thank you. Tamal, like, first of all, let me acknowledge the support of the banks that we have received so far. If we look at a 3 lakh crore industry, I think almost 1 lakh 50 or 2 lakh crore has been because of the lending of the banks that we have built the portfolio. And as an organization, individually, we are beneficiary of the term loans and direct assignment, PTC, all sorts of benefits that we have received from the banks. So we are very thankful for that. But since we are talking about how do we kind of ensure that the benefits or further improvement on the products can happen and it can reach to the borrower, since I was suggesting that the rate cut. But I think you put a good question to me, in a sense that if we are a well-managed organization, or for that matter any large organization which has the advantage of rationalized operating cost, can they lend at a much more reasonable rate than any other, or expecting for a lower kind of a credit from banks? I think yes and no. There are two parts to it. One, being in this business, our assets are concentrated in one portfolio, and the portfolio is unsecured, underlying portfolio is unsecured. Though in a normal circumstances, we do see that 99% repayments are there and there are no delinquencies and stuff. But at an event kind of a scenario like what we see in COVID or what we see in Kerala flood, because of the nature of the business being concentrated, you have a huge impact. So as a prudent policy, we take into consideration that we have to provide for next 4 years or 5 years. We don't have to provide for today. So the cost of credit definitely goes up for us. So that is one part of it. The second part of it, unfortunately or fortunately, I think RBI has put in capital adequacy norms, and large organizations are required to follow the Ind AS accounting. And Ind AS accounting with ECL calculation, if you look at, the credit cost goes much, much higher. And your capital adequacy requirement is already there of 15%, whereas bank has a much, much liberal capital adequacy requirement, though the ECL requirements are now getting implemented for banks.
He has 15%. He has 15%.
Yeah, but with the risk weightage of whatever asset you are originating, based on that, our assets are 100% risk weightage. So that is a disadvantage. But having said that, if NBFCs, MFIs, or NBFCs, well-run NBFCs, are allowed to raise deposits, even if there are kind of a recurring deposits or small deposits from the same borrowers, which is the true model of microfinance, if we replicate what Bangladesh model was, definitely the lending cost can be brought down. But that is something that is up to the regulator to kind of ensure.
Sadaf, that's a daydream. Past 20 years, we are giving the reference to Bangladesh and asking us to do. But what happened to some of the deposit-taking NBFCs, RBI will not forget about that. So we'll hear the bankers. Mr. Das, tell us what do you look for, how you bring it down? Because he was praising you all, he has to be very diplomatic, but in private he'll bitch about you people that how tough you are, etc. But tell us what you look for. Actually, you say, had there been no system of private sector lending, probably half the guys would not have got any loan from you. It's for you, it's an easy way of disbursing because you hit the mark, the bullseye of private sector lending. And then you insist on that so-called FLDG, there's that, you could, this much FD, rakho mera, no, I'll keep it in
Right,
South,
right.
I can't speak Hindi, should not speak Hindi. So, you have to keep this FD, that FD. So actually your cost is pretty, high. What do you look for? This is the biggest challenge for the NBFCs in the microfinance space. What are the qualities that you look for to overcome they should have to have access to relatively cheaper funds. Other part is this, they need to have
Right.
better operational ability so that their operational cost goes down. I think with technology, we are talking about the past, on innovations, we spoke about how India stack and everything. India is the forefront on technology part. So technology will bring down the operational cost. Right, but as you know, the Reserve Bank of India has freed the interest rate in April last year.
Right.
But I don't think any financial, any MFI has brought down the cost. Nothing. Today the excuse is, the provision coverage and all this because of COVID. Tomorrow there will be some other excuse. They will actually push it up. One gentleman, I think from World Bank, he spoke about, he's wondering whether the cost has come down. No, nobody has brought down the cost. They have taken the opportunity as push up the cost. But that's a separate story. How you will be, when you will be able to bring down your loan cost? What are the qualities you look for? Ma'am, you will be the last speaker. And then we hear these two bankers and you are also. Tell us. Sir.
Thank you, sir. Thank you, sir, bringing the entire contest into the perspective. And Madam is representing State Level Bankers Committee here. Indian Overseas Bank is our State Level Banking Convener.
She will have the last word.
Yeah. In that context, I am giving an example. This Tamil Nadu Development Women Corporations, they had set an ambitious target of SAG loan disbursement of 25,000 crore in the financial year 22-23. And 15,000 crore was set aside for December 2022. This is the very first time in the history of Tamil Nadu that this target was surpassed, and bank could able to disburse 16,922 crore, and Indian Bank and Indian Overseas Bank along with the other banks were the very pioneer in disbursing that. Now, if you compare into the last year kind of things, it was around 60 to 70% penetration, but this time we could do it 70%. Now, what made the difference? This is where the cue will come. The difference came that the indebtedness, there is too much of talk about of the credit only and the funding requirement. As I said it earlier, as a lender's perspective, I will be looking about the cash flow, I'll be looking after the clientele profiling, I'll be looking after a good credit scoring. I require that the compared profiling of the members, what this Tamil Nadu Development Women Corporation could do. Starting from the identifications of the beneficiary for their profiling along with their credit clientele score. For example, they visited, for example, somebody is having a Pakka house, they had their, apart from the bureau model and credit rating, somebody is having a Pakka house with a photograph, some 15 marks will be allotted. The cash flow they could ascertain, they could give the visit report. So this kind of discipline, this kind of informations which is required from the MFI side. Then only from the bankers and lender perspective, I would be very comfortable. Because what I require that, I cannot grow my books indefinitely. Today, if it is most of the banks, if you see that, their total gross portfolio and the NBFC portfolio, it will constitute around 14 to 20%. My book is around 14%, State Bank of India around 18%, IOB something around 11%. If you say that, it hovers around that way. So for me, that the credit starts from the good appraisal, with a good scoring model, the identification of the borrower, profiling, the monitoring, the recovery, and top of it, again I am telling that it is the gamut of the kind of security. Today, indebtedness does not come from the stock, when the cash flow stops. Some misfortune incident happens, the breadwinner loses its sight. That year you need to have a social security schemes. And these wonderfully very low cost social security schemes have been given into a different drive. So there where this SSG bank linkage, they did the drive that let us have a social security scheme coverage. So bankers are assured that the breadwinners are being ensured for the complete of the gamut of the social security schemes. This is what one we are looking forward. And talking about the macro level, sir, very rightly you have said it that we are missing the target perhaps. There is too much of ovations towards the rural poor, too much ovations towards the BPL category. We are conveniently forget about the urban poor. The Jan-Dhan schemes, when it was enacted, they targeted, the missing target was the urban poor. There were clusters in the urban poor which we really missed it out. So the outreach is also one of the factor. Third factor was, sir, as told that the rate of interest. It is the principal based lending by RBI that kept a individual ceiling cap, that made a individual, you can say that interest rate ROI cap was there. So but the MFI has to look into that. We need to brought down the cost, operational cost, and the cost of outreach also has to be reduced. When we talk about Bangladesh, kindly let us be very critical. The operating cost today in Bangladesh MFIs is around 23%. But still we are operating, some of the MFIs are operating with a very high operating cost, something around 60 to 70%. This is also one of the factor. And if you look into that, most of the setup are into the NGOs. And the NGOs at the top bracket level, they have got a complete dissemination of the product informations and the kind of information bank look forward. But at the grass level, when it comes to the delivery channels or the connecting persons who are like field supervisors, they lack, unfortunately, the financial knowledge and the kind of information required to convince the borrower. That also one of the part.
Thanks. Yeah, thanks. That's actually the first example that you gave. I think all these NBFC entrepreneurs who are sitting here, I think that's the message is very clear. What kind of entity you look for and who can give you relatively cheaper loan. I mean, that's how well equipped they should be. Thanks, Mr. Das.
Thank you, sir.
And you raised a very important point about rural versus urban. That's a separate issue altogether. Again, we find that MFIs particularly are not very comfortable with the urban clientele because for many issues, one of the issues is their address. So there are all the immigrant laborers, etc. They take money and they run away. Whereas in rural India, you know where to look for. Particularly post-COVID, that's the phenomenon. Venkat Krishna sir, very briefly, Prayas is a unique Prayas where you are given money at a very cheap cost. But otherwise, if one wants to get a relatively cheaper cost lending from you, what do you look for? What are the things you look for? Quickly.
You're targeting him.
Huh?
Prayas.
No. That is it. No. Sorry, I'm sorry. Okay.
I'll take up the question.
Prayas is from Nabad, yeah.
As you also mentioned, and also
Prayas is Sidbi, sorry.
morning, my chairman sir also mentioning about maybe the technology adoption and digitization of the operations of the MFIs at the ground level will help all the MFIs to reduce the cost of their operations. And maybe it could be right from the loan origination and remittance and collection. All these three things, if they are looked at from the technology advancement point of view, I am sure that the cost of collection, maybe the cost of operations can come down, and it can offer a solution for reducing the cost of the MFI lending at a later point of time.
But typically, Nabad, what will be the cost of lending? Refinance part? Huh? Yeah. Okay, different level and all. Ma'am, we'll come to you later. Paul sir, till you became a bank, you were actually looking for cheaper fund, and now he is looking for cheaper fund from you. So, what do you look for from him? Not him in the sense he's a one product company, but the people of his ilk, the NBFC MFIs.
Yeah, my kitty is very small to support. Otherwise, I'm very happy to support all my SOL MFI entrepreneurial friends. But we are also, so I can definitely tell Sadaf that getting a deposit taking license will not solve the problem. We have a deposit taking license now, but our cost of fund has not come down. So
That's what exactly I was telling.
So many, as you rightly said, many well-rated NBFCs are getting funds from large banks. On their cost of funds are lesser than us. So what we are trying to work with, because since we have a 75% PSL requirement, so we cannot lend large amount to large NBFCs. Unlike other banks, for small finance banks, if we lend to smaller MFIs, 500 crores AUM, less than 500 crore AUM, only we get, it will be considered as PSL. So we are limited, and smaller MFIs have got its own challenge. Today is the problem. I think Mr. Dash has said that the capacity of the field staff and all. Today there is not much investment happening to build the capability. I think Sa-Dhan should look into that. Earlier days there was a lot of social capital gone into the sector. These days now it is everything is commercialized and nobody is investing on the building up the ecosystem. That is not happening. So we need the capability of the MFI, the governance, transparency. These are all the things we are really looking to the MFI when we consider proposals. But we mostly work with as partners, so that the loan will be booked on the bank's name, so that we don't have any issue on our PSL. That is why we are instead of giving more term loans, we are now working with taking them as BC as partners. So major challenge, I am only 5 years now as a converted to an SFB. But even SFBs are also facing this same challenge of MFI. MFI is not the loan fund. It is MFIs are facing bigger challenges on the capital side. So there is development institutions like NABARD, SIDBI and all, and government should, even though there are funds, I don't think many MFIs are getting that. Even tier 2 capital. If development institutions can provide tier 2 capital, that will build their capability to access mainstream funding. Even for SFBs, we are facing that challenge. So tier 2 capital, since we are also in the inclusion space, so we have been requesting NABARD. I'm very hopeful that our new chairman will consider that part of providing tier 2 capital for small finance banks and even NBFC MFIs. So that will be a great support for boosting this sector. And also development institutions. So NABARD has got a scheme for refinancing cooperatives, agricultural cooperatives for short-term agricultural loans. So because small finance banks, if that facility is being extended to small finance bank, we will be able to give lend on a lesser rate. So because we will get at 4%, so we will be able to even give it even we don't want to take much margin, only because keep the operating expense into it, and we will be able to do that. So these are all the things to support the sector, the financial institutions working in the financial inclusion sector, from the development finance institutions and from the government initiatives to come.
Thanks, Paul. I think you have raised a very, very important issue, and DG should take note of it. It's not only the funding, even the capital requirement. That's the problem. That's at that point of time. That's a even bigger challenge for the NBFC MFIs. Funding, yes, the tap is there. If you have not done anything wrong, your bank will continue to give you money. But when it comes to the field, I mean, you come on the field to raise capital, it's very, very difficult. Yes, one MFI recently raised money from the capital through IPO. That's the only one exception. But there are many MFIs, large MFIs have been in the market with road shows for the past 2 years. There are not too many tickers, because it's a threat to the MFI model itself in India at this point of time. If I'm not, I'm not playing a role of any Cassandra, neither I am exaggerating it, but that's the field reality. Ma'am, you will be the last speaker, but before that, if anybody has any question, because it's end of the day, we will not take any observation, just any question anybody have, please. You will not get too many bankers here and all, so just, yeah, please. After that, you will come, you have the last word I said. let the question come, and anybody else has.
In fact, I have two questions, but one
Please.
question you hijacked it. Asking bankers that if the MFI loans go out of priority sector lending, and I can see the beginning has started by deregulating the interest rates, deregulating everything, because nobody is asking this question. If this is what exactly it is, then why the credit card rates are so high? That is a separate question, but nonetheless, I feel that, the entire microfinance loans and this group loans and everything over a period of 5 years, 6 years may go out of priority sector lending. In that case, whether the bankers will still fund it or not.
Okay.
So that is one question. Yeah. And my second question is, when we talk about the delivery model, most of the model which Paul sir also has suggested that, you use BC model, and that is the best for any MFI to start with. And being a banker for 20 years and then 10 years to 12 years into microfinance segment, FLDG becomes one of the very, very bad, showstopper for us. So if any lending organization is there, including bank, they make provisions and other thing. And as what he has already said, I provide for 4 years and not for 1 year. But nonetheless, you can still address it by different way. FLDG going from 5% to 10% after the pandemic is just not possible for any BC company or even NBFC to be a BC to a bank is also very, very tough. In that case, can we not coin something like this, that 1 to 1.5%, which is the standard provisioning, those first default is taken by the bank, and the later on part can be taken by the distributor. Okay. So we become also the partner. So it becomes a SLDG and not FLDG. Okay. Good. Can those, thought process can be brought on to the table?
Yeah. Anybody else? I think Gigi wanted to have, or somebody else. This lady, give it to her. And then we'll answer all this.
Yeah, hi. This is Shweta from Elara Capital, NBFC analyst. So I have a couple of questions. So one is, given the funding challenges and operational challenges, which are very much integral to the MFI institutions, so do we see consolidation continue to happen? That's question number one. Question number two, lots have been discussed about individual lending, and these are the same graduated customers from the JLG model. So are MFIs in a way encouraging over leveraging, because ultimately the loan goes to the same borrower? Thank you.
Any other question? No? I don't think over leveraging, anybody will admit that, but most of them, or some of them are doing it. So I don't know. About the question on consolidation, Sadaf, you want to talk on behalf of your industry, not your company, but on your industry, that funding concern will actually lead to consolidation, and then we'll talk.
Yeah, I think Tamal mentioned that capital raise has been a challenge for last 2 years. Obviously, because of the pandemic, definitely investors were reluctant to come into any company, because these are like portfolio which need to season and they need to see what are the delinquencies. But irrespective of that, Tamal mentioned Fusion got an IPO, successful IPO. Our company ourselves, we raised around 400 crores of capital through a private equity investment. And there are other companies who have raised smaller amount of capital. But yes, not everybody has been able to raise capital, and they have been struggling. What happens as a consequence is, one, your growth stifles. And the second is, like, because your portfolio catches up, so there are delinquencies, and then your capital becomes short. So that pushes the entrepreneur into only two directions. Either they run down the portfolio or they merge the entities. To answer to your question is, if the environment continues, which I don't see, because now we see definitely a lot of inquiries are there. And they may translate into investment very soon because you're seeing the portfolio which is originated after the COVID second wave performing really well. So there would be investments that will be made. But in the absence of any investment that comes in, there are limited opportunities for an entrepreneur. That's why I think the idea of institutional support of capital would be really, really good. Otherwise, the other alternative for the entity is to merge. I would also attempt the second question, and I know you are looking me with a cynical eye, but I can tell you this, that with the new regulation of FOIR and looking at a household level indebtedness, now you're looking at the whole picture, a 360-degree picture. I'm also like not saying that there would be no over leveraging at all, but definitely it's much better than the earlier scenario where you did not had an idea of overall household obligation. So now that is getting replaced with an individual loan rather than more and more loan coming into the picture.
Okay. Ma'am, you heard the questions.
Yeah.
So with your answer, both answering their questions and in addition to that, whatever you wanted to add,
Yeah.
last word is yours.
Yeah, even before getting into this topic of whether bank would be willing to lend at the rate that the MFIs want, another point that he raised, I'll come to that first part that we were actually started with, the challenges, the opportunities and the challenges. While we did that opportunities round, I think a little bit of the challenges round was left out. The challenges in microfinancing for public sector banks or for banks in general. The first challenge is the delinquency. What percentage of my loan, why do I lend? One is for the purpose for which it is meant, it is for the financial inclusion or the inclusive development or the to fund the really the needy for the economic, all that is one part of it. And second is I am into the business of banking. I would lend to get it back with my expected margin, right? See, I'm at least 3.5 decades old banker. Those initial years when I first entered the bank and maybe how my supervisor would, you are from the banking field yourself. What they first taught me was how do I decide whether to take up one particular loan proposal or not. They said only two questions you need to take an answer for. One is, will the borrower pay? Two, can the borrower pay? These were the two primary questions we were taught in those manual days. Will the borrower pay is what type of a borrower is he? Does he take the loan with an intention to return the money or not? Two, is he going to make enough money out of your bank finance? Is he going to get into an economic activity which will generate a revenue enough to service my loan and leave a margin for him? Both these two aspects were equally important. Now when it comes to this microfinancing, we don't really clearly differentiate between the purpose for which we are lending it. We say it can be for any purpose including a personal expenses or any other expenses. It can be for any productive, non-productive purposes. If you go and give a loan to any other person, if I go and lend to a factory, if I go and lend for a purchase of machinery or for a construction of factory, whatever it is, the first thing we do is end-use verification. If I have to lend 100 rupees and then I say that you need to get me a margin of say 20 rupees or 25 rupees or 15 rupees, whatever it is, I take that 15, 20 rupees from your pocket. I take 100 rupees from my pocket and this 100, 120, I see that that machinery is purchased or that asset is created. And because of that, then the economic activity is triggered and there is a revenue generation and then he makes his money and I make my money, and that's how the entire banking model goes. Here we say like it is that strata of the society which is not having access to those credits which the formal mechanism is having, and hence we go a little lenient and say that okay, for all your purposes, we lend. Along the way, what has happened is how much of that fund is really getting into an economic activity or a productive purpose is not being measured. We were talking about a lot of data and other things, and where are we capturing this particular data, like how much revenue generation is it enabling? So that gap is one major challenge. That is one challenge. And the second challenge is very obvious, the geographical inequalities that is there in the microfinancing, the south being the lead player, whereas the downtrodden or the economically weaker section is not necessarily in the south of India. It is there across. Why aren't we able to spread it equally is one major challenge. Now coming to the second question of why wouldn't we lend to the MFIs at a more cheaper rate. See, again, I said how we all started was each of us had two distinct advantages. We had the cheaper funds with us, and the MFIs had the reach. Every nook and corner of the country, every part of the country, they had access to those ultimate beneficiaries, both in lending and in collecting it back. So slowly that difference has actually narrowed down quite a bit. That's what I started with that point only. With the BCs and other things and the reach and all that, we are also in a position to reach almost the way that MFIs are. With that difference, the primary difference being not becoming that significant, then comes the cost and the. If I am able to lend to the ultimate beneficiary at say 8%, 9%, I am ready to make lending at that rate. And I am ready to lend to an MFI say at the same rate, 9%, 10%, 8%, whatever it is. And if the ultimate rate of interest that is being charged is say 15, 20 and all that, they have reasons. They have, as you call, their own expenses, their own other things and all that. That gap is too huge. Obviously, we also want to see if there is something that we can also charge. You know what the traffic can bear. There is also the rating of the NBFCs and so many. We have our own credit cards. We also have our own ECL. We have our ratings and all that. So that is the economics part of it. There was one question, a very interesting question. If the microfinancing, this is to be taken out of from priority sector lending, would we still lend? I think I partly answered it. We are into lending, and why not? We would still lend.
And the redefining or repositioning FLDG, that's what he said.
Would you want to answer that?
Yeah, please.
That I will not be answer. That I am not dealing with that one. I will not have that much of data.
You want to answer, ma'am? Yeah. You want to answer? No? Okay. So I think we have up more than an hour. I don't have to add anything. I don't want to waste your time by adding things. I think it's a very thought-provoking, and the bankers are pretty candid. I'll not call her ruthless, but she was very clinical what she is there. And I wish you had more NBFC participant here. It's a little lopsided. Sadaf, Bichara, only one this side, and all four of them. So that the taker and giver balance was not exactly there. But whatever the lessons, I think the audience, you wanted to hear from the banks, how to get fund at a cheaper rate, what are the qualities you need to have. These are the challenges. So that's that. But if they are convinced, and I think all of us agreed that if your business model is right and if you're doing the thing right way, fund will never be an issue. Okay? With that note, thank you, and give them a big hand if you enjoyed whatever discussed.
Sure. Thank you so much. Can we all give a big round of applause once again? I request you all to be seated and stay on the stage. I request our CEO, Mr. GG, to please join us on the stage to felicitate the speakers. Our editor, Business Standard. I request him to felicitate our speaker, Ms. Yes Srimathy, Executive Director, Indian Overseas Bank. I request him to felicitate our speaker, Mr. K. Paul Thomas, MD and CEO, ESAF Small Finance Bank. I request him to felicitate Mr. Sadaf Sayeed, CEO, Muthoot Microfin. I request him to felicitate Mr. T. Venkatakrishnan, CGM, NABARD. I request him to felicitate our speaker, Mr. Sachi Kanta Das, DGM, Financial Inclusion, Indian Bank. I request all of you to come forward for a group picture. Thank you so much.